The global oil market is on tenterhooks, and it's not just about supply and demand anymore. The real question is, can the world afford to keep relying on Russian oil amidst escalating geopolitical tensions? As markets anxiously await the U.S. Federal Reserve's interest rate decision, oil prices have surprisingly held steady. But don't let that fool you. There's a storm brewing beneath the surface. And this is the part most people miss. The delicate balance between economic policies, geopolitical conflicts, and energy security is about to be tested like never before. Here's the full picture. Oil prices remain stable in early trading on Wednesday, following a more than 1% surge in the previous session. The reason? Drone attacks on Russian ports and refineries have raised concerns about potential supply disruptions. But here's where it gets controversial. While some see this as a temporary hiccup, others argue it's a wake-up call for the world to accelerate its shift away from Russian energy. European Commission President Ursula von der Leyen recently announced plans to speed up the phase-out of Russian fossil fuel imports, a move that could reshape global energy dynamics. Meanwhile, all eyes are on the Fed's September 16th to 17th meeting, where a 25 basis point rate cut is widely expected. Such a move could stimulate the economy and boost fuel demand, but the devil is in the details. How many policymakers will dissent in favor of a more aggressive 50 basis point cut? And what will Fed Chair Powell's tone reveal about future monetary policy? These questions are keeping traders up at night. Adding to the complexity, U.S. crude stockpiles fell last week, according to industry data. While distillate stocks rose, this mixed signal has left analysts divided. A Reuters poll predicts a modest decline in crude inventories. But the market is eagerly awaiting confirmation from the U.S. Energy Information Administration on Wednesday. Is this a bullish sign for oil prices, or just a blip in the data? Here's the bigger picture. The Fed's decision isn't just about interest rates. It's about balancing economic growth with inflationary pressures. A rate cut could stimulate fuel demand, but it might also weaken the dollar, making oil more expensive for other countries. So we have to ask, is the Fed's move a double-edged sword for the global oil market? And let's not forget Russia's Transneft, which has warned producers of potential output cuts due to the drone attacks. If Russia's oil supply is disrupted, it could send shockwaves through the market. But is this a reason to panic or an opportunity to diversify energy sources? As we navigate these uncertainties, one thing is clear. The intersection of economics, politics, and energy has never been more complex. What do you think? Is the world ready to wean itself off Russian oil? Or are we headed for a period of prolonged volatility? Let us know in the comments. This is a conversation that needs your voice.